All right, well, joining us now from Tampa to discuss what we're seeing in markets this morning is Rebecca Walser, the president of Walser Wealth Management. So, Rebecca, you've heard us talking about trade. Certainly seems to be top of mind in the headlines today. Now, the market not really reacting at this point. As you see it, what role is trade playing in the market right now? Is it a secondary concern? Is it all about the Fed? Is there something that investors need to be thinking about when it comes to, potential talks of the G20, potential increase of more tariffs, and sort of the continuation, I guess, of this new trade war?
Yeah, Miles, you're exactly right. I think right now it's all about the Fed, the Federal Open Market Committee this week. We're really looking, there's a small 25% or less expectation that the Fed might actually cut rates for June, but really the expectation is to set the pathway for a July rate cut of potentially 25 basis points, given the basically the weak unemployment, the weak jobs numbers that we got, that we missed expectations quite a bit this past month. And, that's really where the investor hype is right now. We have sort of already priced in this cut, actually. So it's going to give us a little bit of a problem if we don't see that the Federal Open Market Committee is leaning in that direction towards July. I think the G20, I do think that Wilbur Ross setting expectations and lowering expectations for President Trump and President Xi to actually meet together and get some resolution at this G20 is what we need to have, because we don't want, investors to sort of start expecting that this G20 meeting at the end of the month is going to be, is going to be some kind of resolution of the trade. It is going to actually take, I think, a little bit longer to actually resolve itself.
Follow-up to the trade question would be, at this point, is it really about what you hear from Wilbur Ross, you hear from Larry Kudlow, or is it about what you hear from Broadcom? And they came out, cut guidance last week. Huawei comes out this morning and says, we're going to miss our guidance for 2019. It sounds like corporations are now really giving us the details, whereas the political side of trade is basically just politics.
Yeah, Yahoo coming out this morning and saying they're going to miss revenue about $30 billion. I think that's really significant, and I think that's going to put a lot of pressure on China, and it's pressure that they need. I think China thinks that maybe potentially Trump won't be reelected. They can outlast him. I'm not exactly sure what they think. President Trump thinks that they need to get a deal, and it is definitely hurting the Chinese market. Here's the thing. I care about the short term because I'm in the market every day, and I care about the short term, but I also really care about the long-term stability of the American dominance of our economic engine that we have. And when you look at the Made in China 2025, this is the whole basis of what President Trump is doing. He sees that China doesn't really want to be China to America anymore. They don't want to be our cheap labor manufacturing shoes, like you've just been talking in the previous segment, and all of these things. So all these manufacturers and all these labor departments going to Congress today and testifying and saying, hey, let's not have this trade situation get escalated. Let's make a deal. Let's get these tariffs cut. What we have to realize is what they're looking for is status quo. They've made a lot of money, and gratefully the market's done very well with these stocks because we've had really cheap labor out of China. But China has got a Made in 2025 program where they're trying to become a much more sophisticated economy and no longer be the low-cost producer of labor in the world. And when we take that into consideration long term, we have to restructure where these products are getting made because China is not going to be it long term. And we know that. And we're trying to change the tune and the story now on our time frame, as President Trump is trying to do, as opposed to China's time frame, which is basically string us along, keep it status quo, and then say, oh, sorry, we're not doing this anymore. We're now surpassed you economically as the economic superpower of the world.
All right, Rebecca Walser of Walser Wealth Management. Great to talk with you, and we'll talk to you soon.